Hey everyone, I'm Tom Thornton with Hedge Fund Telemetry, and today we are doing our bi-monthly short interest review with Jeff Garbaz of Erlanger Research and Quantitative Partners. And quite the market, and we've had some real choppiness, and we have definitely some changes with short interest. So first off, this is our disclaimer. Please speed read or pause it if you're watching the recording. But first of all, Jeff is with us again, one of my best friends in the market. I've known Jeff for over 20 years, and we've done a lot of work together, looking at markets and trying to navigate successfully. So Jeff, you are the specialist with short interest, and we're going to look at the short interest types as well. I've been really a big fan of the option rank, showing either heavy put buying or call buying and how you can fade those. So Jeff, why don't you just give us a very quick summary of the types, type 1 through type 4.
Sure. So a type 1 short squeeze is basically a situation where the stock rank technically, and so let me just do a quick explanation on the technical rank. The technical rank looks at all stocks and looks at how they're trading over the last 100 trading days. So effectively the last 5 months. And then what it does, it ranks them from 10% to 100% against the S&P. So if the S&P is down 5 and a stock is up 5, it's going to have a really good rank within our work. And what's great about it is we cover roughly, let's say 5,500 stocks. We don't throw 550 stocks in each of the 10 categories. If everything is underperforming, we could have a lot of stocks with a tech rank of below 50%, which we'll look at in a second and see that that's currently the situation that we're in. Then we next build a short ratio on all stocks, look at the range of the short ratio historically over time. And our short ratio is different than anyone else. It shares short divided by average volume over the last 12 months. And so it smooths it out really nicely to be able to see how the short ratio is changing in relationship to the absolute number of shares that are short. And once we know the range of the short ratio, then we build what we call a short intensity level, how high or low the short selling is. So in a type 1 situation, strong tech rank, decent amount of short selling, and a short ratio of at least 1.5 days to cover. A caveat on the short ratio: bigger cap stocks tend to have lower short ratios. Mid cap, small cap stocks tend to have much wider ranges and can see the short ratios go well beyond 10 days to cover. Type 2 is a stock that's doing well technically, but no one is short. So basically, if it's going to go up, it's got to go up because people are buying the shares. And we do a lot of work on volume. We have an indicator called volume swing that helps us figure it out in type 2s if there really is legitimate buying going on, or if they're setting up as potentially short ideas. Type 3, shorts are right. Weak tech rank, heavy short selling, decent short ratio, and guess what? The stock is going lower because it's got the bad tech rank, so it means the shorts are making money. One thing to comment on there is we do have an additional rank which tracks how short sellers do on a stock-by-stock basis. So we are fine with shorting stocks where the shorts traditionally make money. So something to be aware of as time goes on. And last, a type 4, weak technically, no one's short. So if everyone is selling shares and no one is covering, the tendency is for a stock to go lower. Great example of a type 4 right now in the work would be Tesla would be a good example. On the list this week, we have Honeywell, and we also have Garmin on the list for this week. So that's a quick summary of the types, and I'll turn it back to you, Tom.
Okay, Jeff, why don't you take over the screen and go over your highlights, and then let's just blast through this because I know everyone is very busy. It's a pretty wild market today, and we've seen a lot of whippy action. So let's, why don't you take over the screen?
Okay.
Okay.
Here we go. I want to start with our market review, which we put out yesterday. So interesting. We'll look at this a little bit today. This is kind of a fun thing. When Tom was talking about options, we have a rank called the Erlanger Big Barf Indicator. Very simply, it's the relationship of the VIX against the S&P, and the whole idea is the EBB is going to be dropping, if the S&P is falling and the VIX is rising. If the S&P was falling and the VIX was falling, it wouldn't tend to fall as much. So anyway, bottom line, the daily EBB is back below zero. And well, in the last period, it was 22.33. And then in the latest data, it went down to, we don't have it there, but it's negative now. I was kind of looking, seeing if we had it within there. Next thing is absolute short selling. Short selling dropped by 2.87% on New York Stock Exchange, and NASDAQ increased by 2 basis points. Not a surprise, because you can see in the last collection period up here, the S&P rose by 9.87%. And the next data that we get, which went through yesterday's close, the S&P fell by 4.69%. So it'll be interesting to see if people came in. I'm pretty amazed that NASDAQ actually was basically unchanged at 2%, 0.02, so 2 basis points. But the New York number was pretty substantial, and that caused short selling in all of our sectors to fall last reporting period, which that's pretty unusual to see everything falling, but it definitely happened. Average short intensity rank fell to 39.03 from 41.45. So that's a drop of a little over two and change. So we're still at average levels with that because we're looking at it on a sector basis. Interesting to me that food staples retailing, short intensity at 51. We only have 3 sectors above 50 now. So it's near its recent high, and people refuse to give up on those ideas. And you can see down here, looking at the various major ETF on the index level, and also looking at TLT, every short ratio had a slight drop. And we're across the board, the short intensity levels are low. So not a lot of short selling going on in things that people would use as a proxy for their shorting within how they do stuff. So that's kind of a good quick summary. I'm going to skip down through some stuff, and I find this very interesting. Energy, we highlighted again. You can see here that in energy, the short rank is coming off, but we're still at 39%. Volume is still positive, so there still are a fair number of energy names, even though the covering has begun. We're not back down to where the shorts really start adding at 25%. We still have a ways to go. So energy can still be a sector that has squeezes. And what's interesting is on our group level, every single energy sector looks awesome in our work. Coal and consumable fuels is at 3, and oil and gas is at 26. So everything is an outright buy. We have 146 sectors. So I really think of the top 50 as my buys, and basically 90 and below is my avoids. And you can see there are a lot of names, mostly mid cap, small cap type names that really have lots of short selling still left in them.
Jeff,
yeah.
Hang on a second. Someone's saying that we're getting feedback. Someone's mic is feedback. I don't hear it myself, and I'm wondering if it's mine.
Yeah,
I don't hear it.
Yeah,
hold on. Here's my. Okay, someone's saying they don't hear it. Sounds great. I'm here. Okay. Sorry.
Okay, so you can
Brandon, I don't know what's happening. So Jeff, why don't you get started right back?
Okay, so you can see here's the latest drop. So that New York Stock Exchange drop is definitely a decent drop. Obviously bigger drops here, but it definitely was one of the bigger drops that we've gotten. Interesting though, NASDAQ not even close to a drop. It did drop several periods ago down here, but we're still at good levels. And here's the chart. NASDAQ, I mean, look at this, all-time high in short interest. So people clearly think that NASDAQ's going to continue to have problems, but this is going to represent opportunities to trade when you get into a couple week cycle where NASDAQ stocks recover. So that's something just to be aware of, and we'll obviously be able to identify in the work. Total number of threes still at pretty high levels. The ones in the threes still definitely above 1,000. Ones came down a bit, and that's because over the last 2 weeks, the S&P is off by almost 5%, And that's why we're getting less short squeeze names showing up in the work. And then this is interesting too. This is the market short rank down at 39.03%. So from that, let's go into chart room and take a look and see what's going on in chart room right now. I thought I'd take a quick look going into Erlanger scans. The names we identified this week as short squeezes, all are doing pretty good. We definitely, in both the short squeeze list and the long squeeze list this week, we're pretty much staying away from tech names. We're finding a lot of other names to look at. Steel Dynamics, kind of an interesting chart, pulled back, coming back up. This one could be a breakout name, Horizon Therapeutics, a mid-cap name. I kind of liken it a little bit to Regeneron, which we've had on the list, and Regeneron rip now kind of pulling back a little bit here. I'm actually going to make this a little bigger for everyone to see. Pan American Silver, which looks great. It's tracking really nicely. I think it'll be interesting to see if it can kind of clear this 30 level coming up. You can see there's a lot of resistance going back into 2020 on that one. So Tom, that's a name probably do some DeMark looking at here in a second. Altria breaking out, looks good. I wanted to have an energy name in, and CNQ was kind of like a name I thought that would be pretty good. It's working. Hartford, nice name, working. Stryker, it's come down a bit, so that was to me an opportunity to look at it. And Cooper Co's pulled back too, so I thought another opportunity. We've had this on the list, like Marriott pulled back, but today Marriott is a ripper. I mean, it's up over 5%. Clearly, probably on the Delta news of the good numbers. Tom, wouldn't you say that's probably what's driving it?
Definitely. One thing on Pan American Silver, we do have some DeMark exhaustion signals looming up at these levels. So from my angle, yeah, it looks good on yours, and it could go a little bit more from mine, but it's getting to a place of exhaustion. And if you had bought it at the lows in late January, you had buy signals down there. So sometimes when yours looks so good, I will, have to be the wet blanket on the party.
That's all right. That's all right. We actually have kind of a cool thing I'll show just real quickly. We have an indicator called the Erlanger overbought, oversold in ENS. Let me just go to it here. I hit the wrong thing. It'd be interesting to see, like, so you and I should just start doing some tracking of this, because it'd be interesting to see when we get the overboughts on ENS, if that kind of coordinates pretty well with DeMark. That would be kind of fun to see. Yeah, we're still kind of mid-range on it, but Tom, I'll start sending you a list actually of things that get overbought and oversold, and we could line up, and we'll just start looking at it internally. That might be a fun thing to do.
Yeah, sounds good.
Looking on only a couple short ideas, and my thought on the shorts.
These are the type 4s.
Yeah, these are type 4s. I wanted to go larger market cap, and
I'd say Disney
and lower. Yeah, sorry, Disney's on the list. It's kind of more than anything, it's a place marker. I thought that stocks would do okay this week, so I was looking for shorts that either would kind of work. I love this one. I love Yum China. It's been weak it's been struggling this week, but popping a little bit today. But it's back to basically where it was. But I like the idea given what's going on with China. Clorox
go back to Disney, because that's one that I've recommended. I just bought it recently. And can you put up just our normal other stuff with the option rank?
Sure. Yeah, sure. Hang on. Yeah, so it does have the excess put activity. It definitely does. It hasn't gotten into the channel yet. That's why I was okay with it. But another day or two, and that might get into the channel. So that might be interesting.
Yeah, I equate Disney. I like it. I mean, we did get finally a DeMark buy countdown 13 on the lows recently, and I bought it. And I've been really patient waiting for this one, because I feel like there's a lot of upside. I'm also really big on travel right now. That's, as you know, I'm super long airlines. I've been trading around those, and I added more last week, or I added them back last week. and they're having really good day today. I mean, Delta's
Yeah,
numbers.
it's the volume is it kind of hit a low back here. It's starting to creep up. Today we'll definitely probably help it out as well. Clorox has been
this is actually a really good one for the option rank here, because actually go right back, pop that guy bigger again. So the green dots that's excess put buying. That's heavy put buying when you see the green dots, and there's times where the put buyers can be right, and then there's also times where the call buyers can be right, and the call buyers are the red dots. But you don't want to be, usually you can fade these signals with some confidence, because people will buy puts at the lows or at a seeming low, and then buy calls as things are trying to break out or moving higher, and you can fade these signals. And I think this has been actually one of the best things to follow over the last year, because of all the distortions with heavy activity in the derivatives markets and options. And
it's only going to continue. It's not going to decrease.
Yeah, I agree.
And Tom, to your point, this is kind of interesting. So the reason I put it on was I saw the option rank coming down, and now it's under 70. So the way I look at it, this thing has played itself out, but it still was a type 4. So I was thinking like, okay, maybe we get a bit of a pullback on this thing, and it's also defensive. So if we were going to have a decent week this week, I was like, okay, this will be a decent name to put on the list. Interesting, Tom, to your point, where something that's kind of struggled and got above, you can see the call buyers were right during this period,
Mm-hmm.
So that
until they weren't, and it gapped down, and that was really important.
Honeywell also on the list, and last name was Garmin, which is to me, Garmin is really interesting. Although just to hit this, I mean, if this thing breaks 110, Katie bar the door. We can just take a look here at let's just do a weekly chart of this thing. You can see here. I mean, we break this level. I mean, we're probably going down.
The lower is the short ratio of days to cover.
Yeah, look at that historically. It's like, my God, the shorts are just gone from this thing.
Yeah, they've been gone for a while too.
Yeah, like a couple of years compared to where they were back in here. Okay, so do we want to you got any more things you want to go through, or do we want
actually I have a few for you. Let's everyone is just, we don't on ETFs, we don't have a tech rank, and there's a couple things that because of that. But why don't you look at TLT? Everyone is just looking at that, and bullish sentiment hit 5% on the 30-year treasury.
Now, Tom, one thing I will say is I'm just going to kind of go into here and go to add study. We do have an indicator that does a good job, trend direction, which I like. Phil built it. It was like one of the first indicators he built. And the whole idea is if you're green in the upper half, you're trending. If you're pulling back, you're red in the upper half, and the bottom half trending to the downside, and then rallying green. So let's see where we are right now. Yeah, this may turn. I was kind of looking at this.
Is that on a weekly? Or
that's a daily. That's a daily. Yeah. So we moved kind of from here where we were pull back, and then since we've been in the bottom half, which is downtrend, we've had a couple little rally modes, but I'd like to see if this thing can get back there.
Sorry, on mine I saw heavy put buying in. I'm just pulling up my chart room here. Hold on.
Yeah, I think actually I had someone who's on this call who mentioned that, and I think Tom, you might have been blurry-eyed. it was in your end of your travels where you recommended it, because someone hit me out yesterday on that.
Yeah. Okay. I'm not sure where I saw that. I mean, all I hear about, if I put out saying that I'm buying bonds, I hear people saying you should be buying puts, and maybe that's true, but I mean, I have lots of DeMark signals that are showing up, and
this is interesting. We do have potential for like some more upside. So when I go to the seasonality chart, Tom, one thing I love to do is just hit the crosshairs and then hit the data window, because I can see the exact date when we get back to negative seasonality, and that's on it'll happen next week, kind of midweek, but we still have a run now. But also the cycle R compares the oldest data and the most recent data 0.35. So what I'm going to do right now is come in and optimize it and see if there's a more recent period that has a better score. Yeah, pretty much the same. It goes to 0.81, and again, it's kind of right into this period, which is the 20th as well. So I don't know, maybe it's post-tax something, but once we get to here, which is the 12th of May, there's a really nice seasonal move here that goes all the way into
Right.
into end of August, 824.
Yeah, I look, my longer term view on bonds and rates, we're going to see higher rates. And that's, I mean, that's the bigger picture. But when you get a 5% sentiment read and you have the DeMark signals that are triggering, I'll take the other side of that. And maybe this is just a wise guy trade that'll, you know, for a bounce, you know, we'll see. Okay, let's keep moving on. Actually, one that I added some utility exposure on the short side yesterday. Let's look at XLU. The utilities are down today, so that is good.
Yeah, they look like I've had them in our stuff as you know, as names on the long side, and recently I kind of stopped with that. So I think the thing to watch would be ETD here and see if we can get ETD to go red. With this little hook here, that's a definite possibility of occurring.
Right. And you know what? It's interesting. You're seeing a lot of put buying in this as well. So it's a little precarious, but I think that it's such a bond proxy as well.
I'll show you a fun way, Tom, to go in and if you go to utilities and you go sort by types. So let's go down to type 2s. I'm going to hold the control key down. I'm just going to hit market and I'm going to hit it again. And then I can see, so starting at Sempra right here, all these are type 2s. So I would look at any type 2 in energy that's got a pullback going on as a possible aggressive short idea. So Sempra, these might be some names for you to look at. OKE,
look at SO. I'll tell you the ones that I shorted SO and ED.
Okay. Yeah, well, call squeeze. There you go.
Yeah,
I'm okay with that as an aggressive trade. And what's
I mean, it's been a type one short squeeze there, and this one, see, there's call activity in these, and
yeah. And you said ED, right?
Yeah. So those are working for me.
ED another day or so, Tom. It's at 67. It's going to get up there. It's gonna hit that 70, and then that call squeeze will get activated. So I like this too. I mean, what's great about this trade is you got a big whole number just above this 100. And if it breaks through it, it's a natural level to cover. And okay, so you're only risking like, you know, 2.5% loss on the thing, you know, and look at the downside. You're coming down to there. Maybe I love this trade. I think that's a great idea.
Okay, good. Let's look at GLD.
Kind of had a little, I mean, this is where ETD is kind of nice. Went positive back in February, kind of hit a little pullback, and now we're back to green, and it's kind of reasserting itself. So that looks good.
Yeah, I was long gold for a bit, and on that spike, I sold it. It hit one of the upside wave 5 price objectives at 2050 on the futures, and I did see all the call buying, and that was it for me. I said, okay, fine, I'll take it, and we're out of here on that trade. Let's look at Nvidia. Oh God, this one has been nuts. I was long this one from just about where it is now, and got out with like a nice 25% gain, and here we are back again.
Yeah, and look, it's setting up for another put squeeze here, and it's got good seasonality. So without going to the seasonality tab, we can just come over here and kind of look and see. We don't get negative seasonal weakness again until like July on this name. So that's kind but clearly over here, relative strength, broken the S&P, broken the sector, broken the group. So it's like people aren't buying it because it's been hanging in there,
Yeah. Let's look at Twitter.
Oh, you mean, I'm not going to say it.
Yeah, don't say it. Don't say it. This is a family channel.
Yes. Interesting that it hit the 200, and even though it's got like shorts in it now, it didn't, like, there was no fear factor there.
Yeah, there was a lot of put buying, and I was long for just a brief moment, and I got wiggled out of it, basically a small gain, and I wasn't there for the Elon Musk trade. So my view right now is there's still probably, I mean, and the trade, once all that news hit, that's before this data was taken.
Right.
Or this data was taken before the news. So it doesn't reflect it in this. And if anything, you can see it with the option rank dropping. And that is part of the, you'll probably see call buying. I mean, that's more call buying starting to happen.
Yeah.
Versus put buying. And we know how the gamma squeeze goes with all of that.
What's amazing? What's amazing to me, Tom, is like, I keep this. I have a list up here. It's the Robinhood 100. So it's the most popular names in Robinhood. And amazingly enough, Twitter is not a top 100 holding of the Robinhood crowd. And it's kind of mind-boggling to me because it's typically a much younger crowd. They own this thing, which to me, this could be the most interesting short of all. This DWAC, this Digital World Acquisition. Have you been following that?
Try not to follow this. I mean, it's a, there are a lot of cult stocks, and this is a cult stock. But let's keep moving. I don't think anybody should be.
The one thing that's amazing, Tom, look at this. No one is short this. Like 13% and 0.29 days to cover. Like there's absolutely no short selling of this stock.
That's interesting. Yeah, well, it's one of those that it may be just a little too rich for my risk tolerance. Let's keep going on UNH.
Love it. It's been interesting.
Did you know that UNH is the biggest weight in the Dow Jones?
Wow. Well, it's interesting. We've had it the last couple of weeks in our type screen, and look what happened. The shorts got squeezed on this. They just came out of it. And now it's got a call squeeze in it. Clearly still doing really well. But I was kind of like, okay, when we got up to the 540-ish level, to me, that was kind of enough for it right now.
Yeah, let me just, hold on. Let me look at my screen on this, because I've been in and out of this one in the past. And, thanks to the Affordable Care Act, it's been one of the best stocks, certainly in the world, in the market. I don't really have a signal on it right now. A little bit of a pullback here. Okay, let's keep going. Robert wants to know Duke. DUK. So we're going to look back at another utility.
I'm a fan of like shorting twos. Like to me, that's the only way in this market right now you're going to make money really on the short side, really decent money. So this looks like it's a type 2. You just need to start getting some downside type stuff hitting, and that would be interesting.
Okay, let's look at Take Two, TTWO. Any others, guys? Just type them in.
Short's making money, but it is now setting up for a put squeeze.
And there's a high short ratio here, 100% short intensity.
Yeah, kind of interesting to see that, being the case. I am going to go look at one thing real quick. This Take Two interests me because the short intensity is so high at 100%. Hang on, I just want to look at this. Here we go. So what I'm doing now is I'm pulling up a screen that lets us look and see how the short sellers traditionally do.
Yeah, I'm seeing. I I have
They're
a
bad.
13 on this in play on take
They're,
two.
by the way, they're bad. They're traditionally they lose. You can see right here. There's been 11 times this has had short selling, and 81% of the time the shorts have been squeezed. The average squeeze is 30%. The 2 times they make money, they make 20%. And what's interesting is so far they've made 12%. So they've only got another 8% to go. So if this thing came all the way back, and with it 12% now and 30 down 12, it would have 42% upside to it, which would be pretty interesting. So that's why I love this SIP type stuff when I can see something that's where shorts have really made a big bet, and I can say that these are dumb short sellers. That's just a fact.
Yeah, it needs a little bit more confirmation on my stuff
Yep.
to see a bounce, but it's certainly down significantly. Okay.
I mean, Tom, one thing that's interesting about Take Two, before we go away from it, you and
Yeah.
I were talking about Ralph Lauren and that it could be a takeover play. I mean, to me, like in software, like, you had Activision taken out. Someone could be looking at this. I don't know why shorts would be at this point. They've made decent money in it. And you can see they're just pressing this thing. And they've been doing it now for 3 months now. So they made good money. And to me, making 12% in this type of market is not bad. And look at this, 6.46 days. It's going to take them a long time to cover their position. We're just
Right.
in a, yeah.
Oh, here come all the symbols now. Are they the one buying Zynga? I forget.
I'm not sure.
Okay. Because that could be part of it. Why they're.
But it doesn't look that way. Usually what happens is if someone's buying someone, then you get a big pop. This is just gradual increasing.
Mm-hmm. Yeah, I'd be more constructive on that one as a long. And okay, so let's do these a little faster. HYG, another one that does have a DeMarc by countdown 13 in play.
No, and short it.
Wow.
Just putting in the trend direction. And it's still in a downtrend.
Interesting.
And by the way, we may as well look at this because this is kind of like its bigger brother. Is LQD looks the same, but what's interesting is look at LQD, Tom, how it broke the 120 level, whereas HYG is kind of hanging out at 80. So it's like if this is the leading indicator, it just broke that major support level, and maybe
Right.
that turns into But are you saying on HYG you're potentially getting a buy signal?
Yeah, and almost every fixed income rates,
Yeah, I see that. I can see how that could
bond futures, ETFs, they're all starting to show up together. Okay, CCJ.
Nice chart. And people are buying it. It has nothing to do with short selling.
Okay. Yeah, type 2. JAMF.
That's a great symbol.
I don't know what this is, but it's coming from someone that I respect.
It's basing. It's got a nice basing formation, right?
Mm-hmm. Or in other words, one of those like flatlining. Dead. Okay. GDX. I was short a little GDX. I covered out of it a nominal loss. Part of it was the option rank there with all the call buying, which I'm taking quick losses as fast as I can in some things. Some things, I'll give it a little bit of time, but didn't really have the patience for this one, happily. Anything?
It looks okay. I mean, it looks like gold. I mean, obviously.
Yeah. I can't with the option rank at 0 with heavy call buying. It just doesn't appeal to me. Even though it doesn't add up for me.
What's interesting is seasonality is kind of worthless. Cycle R equals minus 0.29. So what that means
Mhm.
is 1 is a perfect correlation seasonally, 0 is no correlation, -1 would be inverse. So this is the seasonality is very sloppy. So I would not depend on that. Let's add a letter and look at the junior miners and see if they look a little better. They actually look even worse on seasonality, but they look the
Mhm.
same. Actually looks better, doesn't it? It looks a little better because if it can get through 50, they're pretty similar. They're pretty,
And 40 was a big resistance level too. So that,
yeah.
I'm glad I just stepped aside. Qualcomm, please.
Foot squeeze. Kind of
Okay.
negative on everything else, but it definitely is a put squeeze.
And SMH. Now, let's just remember, Jeff, I will give you major kudos because you were at, not too long ago, you were recommending shorting the daylights out of semis
Yeah.
because they didn't have anybody involved on the short side. And that was, I remember you mentioned Nvidia, AMD, and those have worked really, really well.
Yeah, they've been good.
Yeah.
The one that's hung in though, kind of okay, is Intel not as bad.
Yeah, but unfortunately Intel just has been dead money for so
Yeah,
long. I
exactly.
like what they're doing. I like the new CEO. It's just going to take time from every single tech analyst I know. It's just saying it's just going to take time. And when it goes, you can have a very nice run. But until then,
It might look like, well, not, I didn't mean to do that one. I meant to do. It's interesting, Hewlett on the Buffett news, got the pop and it just
mhm.
hasn't done anything since. It's still decent. And there's people short it, which is kind of interesting coming into the Buffett announcement that people were short it. And look what they did. They added to the position.
Yeah, but I think the Buffett news came out after the last short interest
When did
period.
that come out? When did that come out? Do you know?
Last week, I believe, when I was
Okay, it was last week.
in
Okay, so we'll
California.
get it in the next numbers. That'll be interesting to see
Right.
how they.
Okay. PAYX.
Pretty good. Shorts did some covering though, so now we're sub 50. But what is interesting, the short ratio is still 5.11.
Mm-hmm.
So there's still it'll take shorts time to cover. I think a really important thing to think about is this idea of liquidity. And the thing that I like to look at is our volume swing on the entire market. And it's gone negative this last week. It went from a +5 to a -2. So it's really hard. I think, Tom, you'd agree. I mean, look, you know this from being a buy side trader. I would hate to be a buy side trader right now because there's no liquidity. It's a brutal time to be having to do stuff.
Yeah, when you're trying to move a fairly sizable position, you have the real risk of moving it in the direction um, you want it to go,
Exactly.
or it can be, or where you don't want it to go. It's
Yeah.
very difficult. Let's go. Keep moving along. CVX, and by the way, that Paychex does have some DeMark upside exhaustion signals in play.
Just by chance, does ADP have the same exhaustion signals? I mean, almost similar, exact similar chart patterns.
Let me look.
And the shorts disappeared in this at exactly the same time they disappeared from Paychex.
Let me look. Sorry here. Okay, let's keep going. CVX.
Shorts gone now.
Yeah, that's interesting. You've been very correct that Chevron and energy stocks, the shorts were piling into it as it went up, and now they're bailing a bit. And you saw there's a lot of call buying into that in the options rank down there. Okay,
Yeah.
let's keep moving. Bed Bath and Beyond. And I'm going to get to try everyone, but if I don't get to them, you can ping me and I'll do my best to get back to you. I've been so busy and I'm running a little short staffed right now.
That's a breakdown.
Yeah,
Not
this
quite,
thing
not
is
quite, not
a
quite a type
disaster.
4. We need to get that tech rank to 30%, but it's
Yeah,
it's a
look at the
quasi
call
thing.
buying. This is what where the meme stock people are getting their faces ripped off. If you look at the call buying there, they bought calls up there. I mean, that's
Look at this. Like they bought calls in there and then it came
yeah.
down,
And
you
boom.
know, they bought calls in there and then it came down. Um, they bought calls into that and then it came down.
Mhm.
Interesting though, like when the puts got high, they definitely kind of stabilized. They've stabilized for I don't like this. I mean, here's the key point on the option stuff is look at this extended period of kind of like put activity.
Mhm.
You really, in our work, you really don't want to see it. You want to see it all of a sudden pop up at an extreme, like here, boom, you get the put squeeze. Now you get to there, boom. And my favorite stock out of all this is Apple. Look at Apple, like it typically gets to an extreme for a bit and then it goes away. That's ideally what you want. And I kind of ignore stuff when it, like going back to that Bed Bath and Beyond, when we get like there we go. When we get this long period in here, I'm kind of like not interested anymore.
Mhm. Okay, moving on. Eli Lilly, LLY. This is one I recently shorted just the other day, and I had both daily and weekly DeMark sell countdown 13s.
I like it. Look at that. God, that looks great as a short. Probably goes on. I can tell you right now, it's probably going on my type 4 list next week. I love that. That looks great.
And there's a lot of call buying on the way up, and it's been the number one pick by a few analysts out there, and it's done great. I'm not looking for it to go that much lower, but I'm profitable in it right now, and I just feel like it's been very extended. It was around almost 20% above the 50-day moving average, and that's the highest on my screen over here for healthcare. Anyway, let's move on. DoorDash for Jill. Hey, Jill. I was long this and I got out of I got the squeeze and I was short from the highs and then got out, did like 40%, and then at the lows I bought it and I got out of it right as it squeezed, and I was like, okay, enough. It was fun. It's fun to sometimes play the market on both sides and fight against the longs and then the shorts. So
This might be a
I
time
take
to
no
go.
prisoners.
This might be a time to go short it.
Yeah, you're probably right. Cliffs, CLF.
Toppy type 2.
Yeah, that one's very loved. I mean, look, the short intensity is 0, and if anything, if you've been short this, you've covered it in the last month and a half. There's some call buying there at the highs.
I want to see something. I want to see how yeah, I mean, volume's okay, but not, I mean, you can see it's kind of slowing in it. There's not as much buying in it right now.
Right.
Still
Right.
positive at 22, but it's definitely, you can see the slope is turning negative.
Okay, on the same FCX.
Type 2.
Nobody's.
It's setting up for a put squeeze. Interesting.
Yeah. This one's just very extended in my world. Overstock.
Kind of looks like that DoorDash chart, except it's got shorts in it.
Yeah, it's always had a bit. I mean, it's kind of a hairy stock.
See, to me, this I don't know what your thoughts are on this, Tom, but to me, This type of chart pattern that's got shorts in it, I'm just like, stay away from this type of stuff on the short side. Like, if you want to go long it and have a tight stop, I get it, but like, I just don't find there's a lot of value. You got a chance to get really hurt whenever we get like the rally that we had from March 14th to 29th. I'd rather just stay away from this type of stuff on the short side and focus on the twos that are moving to fours, or the twos that are, struggling.
It's kind of interesting that they still have .com in their name.
I know.
Just thinking of that. Let's go ADM for Steve.
Good chart.
Neutral. I mean, they're short. There's some shorts there, but they seem to be
not
showing
huge.
Out a little bit.
They're not huge.
Yeah.
Here's another one in that same space that looks kind of toppy now. The shorts just gave up on it. This Intrepid Potash.
Yeah, well, there's no fertilizer in the world, apparently. Sometimes they get priced in. That happens. GD, defense stocks.
Type 2.
A lot of call buying in there as well.
Yeah.
And then Lockheed Martin, LMT.
Shorts came out of that too.
Yeah, and there's some call buying in there. And look, the last time there was call buying in March, I mean, that was right at the peak, the height of the Ukraine conflict and war.
I like that because what happens when the tech rank comes down, and if and when it does, and it's got the call activity, then it goes back into being a type 4 from a type 2, because the short intensity is low and so is the short ratio.
Okay, so I'm gonna go, let's look at WBA, and then I want to look at some financials because they're reporting today and this week, and I'm long some of them. And by the way, the people that play the characters in the show with Elizabeth Holmes, the characters from Walgreens, it's so funny because they're so stupid. I really enjoyed that series.
I have yet to see that. I know that's on my list to watch.
We not only talk about stocks, but we're going to talk about television shows as well. So there's some put buying in here. There's some calls, and I mean, that kind of looks like it could squeeze here, don't you think?
A little bit. Let's look at its counterpart, which obviously
That's
CBS.
Yeah. That's a little.
I like Walgreens a little better.
Yeah. Okay, moving on. Hold on, let me just see. I'm not talking about cannabis torture chamber. I did take some losses yesterday just to kind of move out of that. There's not much to talk about MSOS. Honestly, there's not a lot of shorts. There's not a lot of buyers either. We don't do futures, Mark. There's a couple symbols in there that I
you said financials, so I thought I'd just pull up some financials.
Yeah, let's
JP Morgan,
let's go through some financials and then we'll end it. And
type 4 with excess put activity.
Yeah, okay, so this was my least favorite. JP Morgan was my least favorite.
There it is.
Yeah. I think it was the most crowded too. It was a type 1. It's not trading as bad as I thought it would be. I mean, it's down 3% now. It's been bouncing around. I'm also long Morgan Stanley, which is basically flat on the day.
Yep.
What do you think? Wait, I mean, I see put activity on these, like Wells. I'm not in Wells. But look at the short, and part of the reason is because the shorts haven't really been there.
Look at this one today. I think they had earnings day, First Republic. Yeah. Definitely no the puts are starting to get there. They just weren't quite enough for us in our work. But
how about Goldman Sachs, please?
There are shorts there.
Yep, that's one of my higher conviction names as well. Citibank.
Oh, they're shorts there.
Yep, yep. So I mean, the thing that's kind of interesting about what's happened with the financials is other periods, the stocks were, jammed up into the numbers and then they faded after that. Now they're really low. You have shorts involved, you have put buyers involved, and it's an opposite reaction. And everybody knows that the numbers are going to be a lot weaker year over year and even this quarter. So I think, in my view, it's things are getting priced in, and I think they're compelling values that most of them are trading at 10 times earnings. So that's, what else do I have?
Well, on financials, so to that point, Tom, let's just go just for kicks. Let's just look. I like to do this is to go to diversified financials, click on the whole sector, sort it by market cap. So let's look at the biggest and see where some people are short. So HSBC, BlackRock, Goldman, we talked about Citi, Moody's, Capital One, T. Rowe Price, Discover, Northern Trust. So there, TradeWeb. Interesting.
Oh, I have one last one, and then we're gonna cut it off.
Look at this one though, real quick. This is, I mean, they've nailed this. I mean, clearly. I mean, look the shorts are just, I mean, Rocket's just dead money.
Wow, that's that. Yeah, I mean, that's the sign where you can get shorts that are right, and identifying that is clearly important. And when this does turn, which it could, that'll be quite interesting to watch.
It might be next year when it's $5.
So I've been so I'm long. Actually, we should do this. Airlines. We go through the.
Sure.
So let's do a couple. Let's do Delta. They reported today, and their numbers were good. Their guidance was even better, and their comments were good.
It's just kind of neutral in our work. Nothing short wise happening. Nothing happening option wise. I mean, the one thing I will say is we show two lines in all of our charts. The blue is the 200-day, and the red is the 65 as opposed to the 50, because the 65-day moving average equals the last quarter. But I love the fact that it's trying to break through the 200-day here. That's that could be a plus for it. Yeah,
I started looking at the airlines at the lows, and I've traded around them on a few, ups and downs. I am long this one, American.
Same chart. Like having an even better day than Delta is. And this is having a good day too. Again, no one's really short it.
Southwest. I was just on Southwest yesterday. So there's call buying in here, and that's a little bit of a concern for me as it starts to lift.
You know what's interesting about Southwest? I just looked for tickets going from Milwaukee to Baltimore next month, and I'm like, holy crap, I can go round trip for like $198. I'm like, wow, like I haven't seen that in a long time. So clearly Southwest is getting aggressive on their pricing here.
I would say that they have pricing power. A lot of them have, pretty decent pricing power right now. And every CEO has come out and said the demand is off the charts. Can we look at JetBlue? I've also been on a JetBlue recently as well.
That is good. That's good a chart because of those other two.
Yeah, I'm not long this one. It's a type 4.
ALK's okay, slightly better chart, but they're going to merge with JetBlue, right?
No, they're Spirit.
Okay, Spirit.
JetBlue, I think. Alaska bought Virgin America, and they just ruined the brand. I used to take Virgin all the time. They were good. Okay, so let's 3 more. Ford, GM, and Tesla.
Type 4, excess puts, maybe put squeeze coming up.
Yeah, I was, I've been a really big bull on this one, and I made money on it from, in the $5 range. But at those highs, there was a lot of call activity, and now you've seen a lot of puts, and I've just been really, really patient. And I think we have a bit, I think we can come out of that type 4 and start to move a little higher.
Well,
GM.
look over here to the far right. What's interesting is, Phil always says if he had only one indicator he would be able to use, he would use relative strength.
Right, I see it.
And there's a lot of people that run money off of relative strength. A lot of the computers do this stuff. So it's starting to turn up and maybe get into its 30-day exponential moving average, which is how we like to look at relative strength on the sectors. And it has crossed on autos. So it's an outperformer now in the sector. And then in the group, it's also an outperformer now. So I would watch that one. That one, I know, Tom, I look at excess options activity every day. And the Robinhood crowd totally plays this. So if you start to see them getting more positive on the call side, that could be a plus, especially being a put squeeze.
They will be chasing this one again. Let's go to GM. Oh, actually, I have one last one after Tesla. So GM's starting to see a little bit more bearishness with the put buying is excess at 100%, and then the shorts are sort of there. I mean, not terribly, but they're there.
It's okay. It's okay. It gets some good seasonality now into June. It has some nice seasonality, which is a plus.
Okay, and then Tesla, and then I have another one, a small one that I recently have been buying. It's an under $5 stock. It's not Recor. That's a stock symbol with
I love this as
price, and
I love this
until that goes.
I love this as a short because it's no one's really short it, nothing extreme on the puts or the calls. Just starting to break down relative strength wise against the S&P, not as much against autos yet, but look, it breaks 1,000, and then people are going to be sellers, and you got the 200 a day down there, and if you're wrong and it holds 1,000, you're out. So it's to me, I just like these type of trades right now. Where
look at the call buying from last November was at the highs, and then you had put buying at the lows in December, and then the put buying continued, and you had a couple vicious squeezes in between, and now you just had a lot of call buying on the perceived positive of a stock split. The last one.
I want to do another car one. This is interesting as Lucid. Look at how the shorts are coming into that one.
Yeah, I traded this one recently on the long side and did pretty well off the lows. And their cars look really cool, but the valuation makes 0 sense. So that was kind of crazy. And Neo.
The Neo shorts dropped out of it a little bit, but
let's look at one that I really like is GCI Gannett. It's a $4 stock, so take that for what it's worth. Yep. How many days to cover?
11.2 days.
That, in my opinion, is high.
It is high. Well, let's go look at historically GCI. Let's just see GCI here.
I mean, it's been on a down. It's gone down forever.
Yeah, it's 50-50. I mean, there's no real advantage here on how the shorts have done, but they have made some really great money, 42%, and so far they've made 14% on the downside. So, but we only have trade.
It's been go back to the main page. One of my ex-partners who I think is just fabulous. He does great fundamental work. He's been really tracking this, and he has met with the CEO and at conferences, and basically there's a new CEO that gets it of how to monetize the newspaper business, like New York Times did, like Washington Post, like the Wall Street Journal, and it's called subscriptions. So there's a real opportunity here, and they own a lot of local newspapers as well. So local newspapers are going to start to charge consumers for their content. So I think it's an interesting type story. It's not necessarily it's not going to $10, but I think it could go to $6. And from these levels here, that's a good, a good day's, good month's work of upside. So that's it. I know
Thanks.
there's a couple of people, Jeff, that wanted a few more, but I have got to cut it off. We're going to do it in 2 weeks and we'll have more things. If anybody wants to reach out to myself or Jeff, or you have a chart question, don't hit me with 50 names, please. I'm busy, Jeff's busy, or you want information from Jeff, I can connect you. So you,
And if you're on Bloomberg too, you can just IB me too. That's possible.
Yeah, that's cool. So Jeff, I thank
Thanks,
you
Tom.
as always, and it's been another very good webinar. It'll be up on YouTube as soon as it can download, which takes forever. All right.
Okay.
Thanks, guys.
Thanks, Tom. Have a good day.
Talk to you.